look at the way in which bankers are dying for deposits. Are you worried that the banking model itself has gone broken? This deposit hunt doesn't seem to be a few months or a few quarters. It's gone on now for what, 6 quarters?
Yeah, actually, I look at it as something of again evolution. Banking is no longer the banking that we knew 30 or 35 years back. It is today become a digital platform. So people will survive, people who will be the leaders of tomorrow will be those who will be able to harness these developments to the good of their customers, and B, for themselves. And that is the main challenge that bankers will face.
I will come to the technological piece. I perfectly understand that the way you approach the customer has now changed. You will approach them digitally and not physically like we did in the branches. But I'm referring to the financial rules itself. I grew up at a time when most of us kept our money lazy. FDs was the way to save. For my father, that was the only way to save. When I retire, I doubt I'm going to keep all the money in FDs. So that was the glorious period of banking. And, we are punishing FDs with capital gains tax, which is completely unfair when you look at, equity mutual funds. So do you think, therefore, glorious banking is over, or we have to change the rules?
It's not a question of glorious banking being over. Banks need to reinvent themselves to make sure that they are a part of this glorious opportunity. Because this glorious opportunity is, I would say, based on several things. I briefly mentioned technology. It's based on new product delivery, and basically trying to understand what the customer wants and serve that to the customer. I'll take just one or two examples. You look at the evolution in the brokerage systems in the country. In the span of 7-8 years, it has completely changed from what it was to a new order. So for the old players to be relevant, they need to reinvent themselves, technologically, product-wise, and repositioning them entirely. Take the banking business. A big fat part of the profit of the system came from idle money that was around. And then comes UPI and the payment mechanisms that we know today. And there is no more the word float. The float has gone.
No, float has gone. Even the government has taken it away.
Basically, then you need to reinvent yourself to what is my relevance and how do I serve my customer? If you get that answer, then you are going to be a market.
Okay, let me persist a little more. Suppose you were heading ICICI or HDFC Bank or SBI today. Because this idle float was available, lazy money was available to bankers, the system gave them a lot of responsibilities. It made them pay higher taxes, their equity mutual funds. It made them do priority sector lending. And lately, the moment interest rates are cut, your lending is cut, but your deposits are not linked to external benchmarks. So, we made the banking system do a lot of social work also. Now, it is coming at a price. So do we have to rewrite any of these rules? Either capital gains tax or priority sector?
What I'm trying to say is that that's not required. No. So these are also going to be what I would call short-term solutions. The long-term solution is, if you ask me if I were in position, what I would do is completely revamp my technology to compete with the fintech. I need to compete with the fintech to be relevant. And once I do that, then these challenges that you said are no longer challenges. I'll still meet my obligations towards the priority sector lending and areas and be relevant to my customer, because I'll have a suite of products delivered the way the customer wants and at a price the customer wants, and I will then survive. But let me bring it down to numbers. The key challenge that banks are facing and will face is cost to income ratio. So unless you disrupt that cost to income ratio to 1/4 of what it is today, you won't survive. 1/4. I'm saying if you cannot operate, you will have to be well below the 35-40% people are.
No, ICICI and HDFC.
And some people are are higher than that. I'm saying if you are operating at more than 1/4 of that, you are vulnerable. You will survive. But all the challenges that you say are
You're
then real
asking for
challenges.
10-15% cost to income.
Yeah, and then all these become not material. The material cost in a bank is today your operations cost. The only way to actually disturb it is through technology, and the technology is with you today. You can run technology at a fraction of the cost that you are doing today, run it much more elegantly, and in a way that your customer would love it, and at the same time your profitability will be better than what it is.